Good afternoon, Saturday. So glad to be here again. I always have this a little bit excitement when I know that I am coming online and to speak a topic that I know it is so important to our folks. Today's topic is about what if I don't like the IRS audit result. And I know you asked that question. Obviously, nobody desired to be audited, but if you did get audited and the result you don't like it, what if I don't like it? And what do you do? And I am today using a real life examples to show you the steps. How do you deal with it? All right, so you are looking at our YouTube channel. This is where all of our knowledge are deposited here. And what we know, what I hear, our clients are talking about, and anything we pick up from the field, we develop that into a webinar. And today, and our focus is to say, I got audited, I don't like my result, now what to do? All right, and you also know that we have our website right here, right? This is our website, and this is where you choose our partners because you clicked our appointment button. If you are a client, or no, if you are not our client, and you want to be, and during the day you are too busy and you don't know how to get hold of us, you go on to this one. This is the online. This is the onboarding with us button, would allow you to immediately, getting access to our firm. You can upload your information, writing a note to us. So you can literally silently online with us and onboarding with us, folks. All right, let's not waste any more time. And we're going to start working on our topics right now. What if I didn't like IRS audit result? And every time before we start these slides, you remember we always go through our firm. I know you heard a million times, but every time I bring you something new into these points we're talking about, we are a 27 years old firm. So here at our firm, our folks speak different languages. So I just want you to know, if you are someone with a big business, but yet English is not really your cup of tea, then you will find someone who speaks your language here in our firm. We have lots of clients. We have 5 branches. I myself served on the federal level advisory committee to provide advisories to IRS. So that gives you a little certainty of who I am. And I also have these 2 books I wrote, and I'm writing the 2 p.m. I hope to get that finished by the beginning of next year. And though the third book is 2 p.m., so I have 4 I need to write: 8 a.m., 10 a.m., 2 p.m., and 6 p.m. Now, let's just say the webinar content we provide you really is a free education. So there's no responsibility tied from the content to what you do by using those knowledge. So just be responsible of that, and knowing that you are getting information from internet, you really need to vet it through your system or engage our firm to provide professional service to you. Therefore, you'll be covered under our liability insurance policies in case we make any mistakes that hurting you so bad, and our insurance need to step in to compensate you. But other than that, I think you will enjoy, our knowledge that we shared online. Last Saturday, we did a webinar on how to get through an audit. So in that webinar, that's the thumbnails on our YouTube channel. You can look for that. I was in the right jacket. And this necklace, I couldn't even find where that necklace is anymore, but it is a picture from the past. In last Saturday, what we talked about is kind of related to if you got audited, what you need to do immediately. So some folks will choose to select representative for example, coming to community CPA goes, hey, Ying, I got audited, please take care of me. So that is seeking representative, right? Representation. And we also talked about steps to approach the audit and prepare for documentation. We talked about Bill's story, remember, in that hour. And we also told you about the best way of avoiding audit. And most importantly, we mentioned at the very end of the webinar about your rights. So know your rights. That's really important because then you don't, kind of have something in your heart and you just couldn't spill it out because you're worried about the auditor is not going to be happy. So you know your right, then you know that the auditor understands you have the right to ask those questions. And today we're going to continue on the audit subject. But what we're going to do is, what if you do not like your audit result? Of course, if you get audited, you're going to have an audit result. There is no way you're going to get audited. You got a letter saying, hey, you're audited, then you never even finish it. No, they're gonna finish it. Either they assess new taxes on you, or they say you're good, you don't have to pay anything, right? There need to be a result. So that would definitely come. What if you do not like it? So story of John. So we're gonna focus on John. I have a lot of data here for you to share with you now how John's audit went. John runs a construction company, and he reports his business income in 1040 Schedule C. You know what Schedule C is, right? Sole proprietorship. So he filed one tax return. And other than his W-2 and his wife's W-2, his 7 children, and then he has his Schedule C that he does his construction business. A lot of contract laborers. Who doesn't have contract laborers in construction company, right? So he has a lot of them, and he also have lots of mileage because he has several vehicles. The contractor sometimes drives it, he drives it. So there's a lot of mileage, a lot of cars, a lot of numbers floating around. And in January 2024, this is a brand new case, folks. So in January 2024, he got an audit letter from IRS. And from January to February, he handled the audit on his own. So he felt pretty good about the audit because every time he talked to the auditor was very polite and friendly. And when he brought in this big, huge box to the auditor, goes, everything you're asking is in here. The auditor gladly received it. And so he cleaned up his hand, he's done. And he waited on February the 22nd. He received the audit result, and he was shocked. He was shocked because he got a tax due amount. Guess what? $360,000. $360,000. That is more than $250,000. So he, of course, he doesn't know community CPA directly, but he has relatives who has done audit with community CPA. So he got our name, he came to community CPA. Now, let's look at John's audit initial letter. And this is January the 9th, the letter dated January the 9th, the John's name, address, and the IRS's the auditor's name is also here. I actually, white it out. And just for confidentiality, right? So we don't want to expose anyone on internet like some people expose people on internet. We don't do stuff like that. Look at this letter, folks. And in there, it says that your federal income tax return for the year showing above is 2021, is being selected for examination. We examine tax returns to verify the correctness of income, deduction, exemption, and the credits, right? So what else they say? They say that we need to see you, right? They give you a date on there. What do you need to do? What do they want to examine? They already give a list. Gambling winnings, and the rest is Schedule C. So this letter tells me that the client forgot to report gambling winning. Because gambling winning is W2G, that the gambling ground already sent that to IRS. IRS has W2G data in their system waiting for John to file his tax return so these data can match and cancel each other. And dear John did not do data match. He did not do anything. He just filed his return, forgot about he has gambling win. So the IRS, knock, 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 you forgot gambling win. All right. By the way, you also have a Schedule C. Great job. We're going to audit you for your construction company. This is how it come about. Now, let's zoom into the construction company, Schedule C, because gambling wins, you can't argue. You win, and then you win, then you can lose too. But you didn't report it. The IRS is not going to consider that you didn't win, you didn't lose, right? Normally, you have gambling win, you can claim up to the winning amount for the gambling loss on Schedule A. If your Schedule A is above the standard deduction, then you can actually get some tax deduction on there. But in this case, we're not worried about gambling win because that's what he has to pay taxes. That's set in stone. This is the reason why he got audited. So now let's look at the Schedule C. Let's take a look at John's 2021 tax return Schedule C. He reported $815,000 worth of sales. And with all the deduction at the end, he claimed $31,013 net profit. Pretty good business, isn't it? And a lot of sales. At the end, he didn't lose money. He made money. He made $31,000. But here, the IRS know that he didn't report W2G, so they start looking at Schedule C. So they ask for those numbers. So they're asking for what? They ask for other expense, repair maintenance, interest and mortgage, and a car truck expense. These are all Schedule C items. So we can look at that. And in here, the biggest number is supplies. And you remember that in that list, the IRS it didn't ask for supplies, right? But when you get audited, folks, it doesn't really matter. Everything will be looked at. So the biggest number is supplies, $241,000. Then contract labor, $317,000. And car mileage, $53,000. All of these numbers now IRS is looking at. And then look at what happened. Remember, he got the notice in January. So from beginning of the January to February the 22nd, he was doing this preparation. He got this huge box to the auditor and said to the auditor that everything you want to see is in the box. And the auditor also, politely received it and told him that, oh, yes, I will look into it and no problem. And thank you for bringing your documents in. And John went home really happy, thinking that the auditor will spend all of her time and maybe his audit is the only audit the auditor has on hand. So she will be dedicated with every piece of paper that he put in the box. The auditor will make use of it. So what's the result, ladies and gentlemen? Look at this. The auditor came back and sent on February the 22nd, 2024, auditor sent this letter out and summarizes all the taxes he needs to pay. There's a $54,079 for accuracy penalty, which means that you grossly ignore the rules and regulations and you just don't calculate anything right. You deserve to be penalized. That's $54,000. Then look down. The balance due. $270,000 tax due, and add interest penalty. And John, poor John, he has $368,284 to pay to IRS by March 23rd of 2024. This is a 30-day letter. So they gave you on February the 22nd, a month later, and you need to sign this piece of paper, agree with it, then it's due, it's done, okay? So this is what he got. So of course John is not happy. So he's coming over to committee CPA, goes, in my life, this is what he said, in my life, I have never seen any money you put together can be $368,000. I have never ever even seen any money together worth $368,000. Where am I going to come up with this money to pay IRS? But that's how he handled the audit. That is what he did. Of course, I know what John expects. I know what John wants. John wants no change letter because he's so honest. He never really cheat anything. He knows he has all the mileage. He knows he has all the contract labor. He has those numbers. He has those supply receipts. It's all in that box. Ying is all in that box I gave to the auditor, and why it is not being considered. Let's see why. This is the letter we got. Not for John, but for other clients. I know it's relatively small, but it's a no change letter. So on the letter, it will say things like, we're pleased to let you know that we didn't make any changes to the audit and the case is closed. So this is IRS typical, most beautiful letter that a taxpayer can receive because there's no change for your audit letter. And now, John, of course, needs to find help. John did not just sign and accept that assessment, right? As he knew he didn't have $368,000 for tax payment in one single year. And do you know that if you are audited for a year and the money you owe to IRS, the tax you owe to IRS is over $25,000, then you will be audited for 3 years. And in this case, John was audited for 2021, and his tax owing at the end, after we did the work we did, is less than $20,000. So that's why he got away from being audited again for 2020 and 2022. No kidding. That's how IRS audit you. And he felt he had enough. John felt like he had enough poo, but just not organized. And he submitted the whole huge box to the auditor, and everything is in that box. That's what John told us. Everything is in that box, Ying, and I gave that to the auditor already. So now, where can John go? I would recommend John. I said to John that go get the box back. Okay, that's number one. We need to see what we can do in that box. So what is John can do when he got a bad audit result and he need help? So here are the list solutions I gave you. You can look for professional representation, just like John came to Community CPA because he happened to know someone who had done this work with us. So word of mouth, and he come over to Community CPA, right? And John can also look for professional representation on website. Website is a good place to search. Type in the best IRS audit, the best IRS representation place in this area. Look for a website. Search for YouTube channel. And a lot of people find us on YouTube channel. We have people listen to our YouTube channel for years. And then when they got into some situation, they immediately remember, Community CPA has talked about that before. Let's go talk to Ying, right? So John can do that too. And John can also check with individual credentials on the licensing board for the lawyers, for the CPA, EA, whatever. Whatever designation they have. As long as they're licensed individual, you can find them on those on these public website, right, to verify their credentials. Let's make sure they're real CPAs, they're not a fake one, stuff like that, right? Ask your neighbors. That's what John did. He asked that to his sister, so that's how he got our name. And there's also low-income taxpayer clinic that John can go to. John has 7 kids on his 1040, so $31,000 net profit really doesn't qualify him to be a normal income taxpayer. He is in low income taxpayer category. So he can go to these low income taxpayer clinic to get free help. He doesn't need to come to Community CPA. And where do you get free help? You can look online. And what I know is a lot of universities has those legal clinic. They are actually for low-income people. You can go for tax audit representation by these, legal clinic. I give an example here. It is the University of Minnesota Law School Tax Clinic. They actually can represent you for free. And you can also go to local taxpayer advocate. They do not represent you for free. But if you felt your audit wasn't done right, and you felt like you have issues with the auditors, and you don't know what to, you feel like you don't want to be limited to the 30 days, you need more days because you need to work with the auditors. And if you can't go back to the auditor, you go to taxpayer advocate, they will help you. Taxpayer advocate is really the place where when you are in hardship, just like John, there's no way he's going to come up with $300,000 to pay IRS. So with that is a real hardship. Then he can go to local taxpayer advocate to get help. Now, but John came to us, right? John came to Community CPA, so we helped them. Let's see what happened after that. John came to Community CPA on June 24th. We got this letter from IRS. So between the February to June, 4 months' time, we worked John's case. So this letter says that, Dear John, and we revised our original proposed changes to your tax liability. You see, there are 2 boxes, right? This follow-up letter could be something like, sorry, we do not change our opinion. And it could also be that, oh, yes, we changed. So this is the letter says that, hi, John, don't worry about the $300,000 tax due. We changed the number. What did they do? How did they change? This is the change they brought to us. They say, did you see on the top left corner, there's a corrected report right there. You see that? That's a corrected report. And look at that. And the balance due, the tax due is $20,683. Plus interest penalty, plus accuracy-related charges, and John owes $28,938. All right? So what was the number before? Was that, this is less than 10%. Less than 10%. It is about 8% of what was assessed before. Now you are like, oh, wow, So this is a comparison. The orange color is the one that after Community CPA get involved, and the other one, it is the original assessment. So accuracy penalty, of course, dropped because the dues dropped, right? So we dropped $270,395 tax liability down to $20,683. So I'll show you how we come up with the $20,683 because, it's not like, there's no, for example, the gambling one, you can't debate that one. And he forgot to report it. We'll have to report it, right? So there's a tax due anyway. So we will look at the details on that. But I want you to be impressed right here for the good work the professional representation can do for you. Drop you to that kind of magnitude, and you are not owing arms and legs. Now you probably just can lose a finger, but not your whole arms and legs, right? So this is a good result. And professional representation in this case did what? This is what we did. On February 22nd, John's audit is concluded, right? And the auditor sent the 30-day letter to pack up the document and ready to finalize. And she was just waiting for John to sign. So that was February 22nd letter, giving John to March 24th. So John needs to sign, so the deal is sealed. Okay? And John came to us. We immediately produced the POA, power of attorney. It's 2848, and faxed over to the auditor, and I got on the call with the auditor immediately. I got on the call. And in that call with the auditor, auditor told us that the box that John gave to her, it was absolutely disorganized. She wasn't going to sort through every receipt, figuring out which one belongs to the contractor, which one belongs to supplies. It's just unbelievably disorganized. So she did not have the time and the responsibility to do that, to sort it for the taxpayer. So it wasn't done. And we asked for time to reorganize the document for John. So we asked for the box back, and we asked the auditor to give us a little more time. We knew that she already gone through that with John, but now we showed up, and this additional time is drag on her case. We're very sympathetic about the workload of our auditors, so we promised her that if you just gave us the box, and we will do it really fast, and we'll get back to you. I couldn't remember whether we requested 2 weeks or a month, but it wasn't like a long time. We requested, and then we got to work. We knew two things are big in this box. Number one is 1099 for the contractors. We have to, John didn't do 1099, the forms production, he did not do. So we go ahead, do the 1099, and also reconcile every checks that he wrote to the contractor to back up on every 1099 we issued. So we got the 1099 organized, done, the backup, we found the backup, so we attached to it. Then we also redid the mileage log, and the auditors would like to see a contemporaneous mileage log, which means the log was made in 2021, not made in 2024. But we don't have that because John don't have it. But what John has is all the job ticket that he does job in where, and it write down how many days and time and stuff on that invoice. So we use the invoice, reproduce the mileage log with 5 important columns, criterias that the auditor is looking for. Number 1 is the date of your travel. Number 2 is starting point, your address. Start from this address. And number 3, and at the other address. And then you want to put in the purpose of that trip. Then you want to put the mileage. Then for that trip, right? So because you're doing to and from, so if you go to one place, come back, that's a 2 line, and with 2 mileages are similar, right? Back and forth. So we constructed that with John. That's a lot of work. I mean, it is not a scientific work like those scientists was studying, doing, but it is tedious, but yet it requires the kind of skill that requires the detail-oriented skill, and it requires the tenacity to details without giving up. And I mean, that is such an important quality any accountant must have. If we don't have that quality, we cannot be good in our industry. Because the only difference is not like John don't know how to add it up. And John knows how to add it up. John's a very smart business person. But to sit there and 365 days, add it up hundreds trips together, and come up with everything in detail, that requires a different set of ability. And that is what we promised the auditor, that we're going to give to her in that way. She will not waste her time to look into anything more. We support her in that process so that she can draw conclusion quicker. And we promise auditor on a date, no matter rain or shine, we will make the date. This is the quality of our firm. I can't tell you how important that is, and I cannot hide my pride for what we can do in our firm, because my folks here in Community CPA, we are crazy with due dates. We knew our due date, we get it done. We're very serious people coming to do this type of work. So with that said, let's look at the initial audit details. And remember, we did all of these work, right? So the initial details, if you look at the lines here, that issued on February the 22nd. If in March of 24th, our client signed on that, then he owed that $300 some $1,000 tax dues. But he didn't sign, so he come to us. This become the initial details. So you can look at that supply. You see that $241,192. So that means when they appear on 4549, the form 4549, when they appear as a positive number, that means they're reducing, that means they're increasing your income. Because you reduced it in your tax return, they're putting it back, saying, nope, I don't want you to reduce it because you have no proof. So look at all these add back. The supplies, the labor contractors, and the mileage. Of course, the gambling win, right? You see that gambling win right there? That was added in because he forgot to report it. So look at all of these. So he ended up with what? Corrected taxable income is $718,000. Because of that, that's why he got this kind of assessment, $368,000. So this was the initial, right? And remember, this is the tax return he submitted. So basically, the auditor denied supply 100%. Did you see that? Did you see, no, what did I do? Let me return back. What did I do? I moved something. It's okay. So I moved something, folks. So this is the screen where I show you. You see, this is an initial assessed, denied almost all of the expenses, right? The bottom here, you see, it is actually the bottom is the Schedule C. If you just look at the line 22 on the bottom, you see that line 22. You see that 241,192. That is the, on the right top corner where the auditor did adjustment. Did you see that Schedule C, supplies? They added back. That means the auditor goes, no, you cannot deduct it. No, you cannot deduct it because you have no proof. So this is what the auditor was doing. But here, after we did all of the work we did, on June 24th, the auditor came back. The auditor goes, all right, I got a new number for you. And you can see the number, the positive number here just went down by a lot, right? It's like going on diet. It's just got skinny really fast. And I have this one to show you. The gray one on the left is the original assessment. The yellow one on the right is the one after we worked on it. So supply. The auditor added back $29,699. So the auditor said, listen, Ying, I have all of these receipts you gave me. I granted all of them, nearly all of them, but just out of the 241,192, there's a 29,699. That invoice is not there. And I cannot give that to you if you don't have that invoice. So we went back to John, and John goes, I don't know. Don't even remember who that is. I don't know what happened. Has to be supplies, but I don't have the receipt. So auditor added it back. Auditor goes, you don't have receipt? It's your income. So our supplies did not end up to be $241,000 deduction. We went down to like $210,000 deduction. Same thing, right? And with the other expense, the auditor goes, out of all the other expenses you had, $38,124, I only gonna allow you $10,000. Okay, so same thing, repair. The auditor allowed almost half of it. Then did you see the supply and the subcontractor, the contractor labor was not there because the auditor allowed all of it. Congratulations, John. We actually knew how difficult that is to get your mileage through to the auditor, have auditor agree. But you have a really good track record. And there's only $6,573 the auditor disallowed, which is related to your parking penalty, some sort of driving ticket and stuff. It should not be deducted anyway. So it got added back. Look at that. So we ended up with only taxable income of $72,739. That number still allowed John to get all the earned income tax credit, child tax credit for the 7 kiddos. And so the family was not impacted by a lot with this assessment. All right. So what if John did not end up doing anything? John didn't come to community CPA, and John just got so sick and tired, and he gave up. He didn't do anything. He's like depressed. Get on drinking. I'm just imagining, of course not. And John is very hardworking. He is not going to, kill himself over this. So what if he didn't? If he did not, then the $368,000 will be permanent. It will become real. The IRS collection department will be calling, and John will have to make installment requirement and start paying it off, right? The IRS will file a lien on John's home. John has a house. So the IRS will file a lien because of all this money John owes. If John did not pay this amount off for the next 10 years, IRS will drop the collection. And John's debt with IRS will be wiped out. There is a 10-year collection that IRS will have on you. If you go over the 10 years, IRS say goodbye to you and you don't owe them anything anymore. If John ends up filing personal bankruptcy, Chapter 7, okay, has to wait for 3 years after June 24th, 2024. You wait for 3 years, and then you file bankruptcy, Chapter 7. Not the kind of bankruptcy that President Trump filed, right? That's not Chapter 7, that's Chapter 11. And Chapter 7 is for personal bankruptcy. So John filed that, and he'll walk away from IRS liability. I just want to leave that there because I don't, there are times you have to file bankruptcy. If president can file bankruptcy for 6 times, I think the regular citizens can file bankruptcy for 6 times, right? At least. I'm just kidding. There's a lot of ways. There's a lot of ways in our system to help people to live a good life. So you don't have to be so depressed with the issue you have on hand. If you are depressed, hiding yourself at home, not dealing with it face on, that's just because you did not find the right place to resolve the issue. You really do need to seek for professional help if you are in that corner. Okay? What if community CPA and John both don't like the June 24th result? What if John goes, heck, I don't want to pay even $28,000. I don't have any penny, and I don't want to pay. Ying, I don't agree. You can't let me sign this. I don't agree. What if that's the case? Then what Ying gonna do is contact the auditor's manager to negotiate. I'll be picking up the call. I will talk to the auditor. John didn't think the assessment was fair, and he would like me to talk to your manager, see whether we can, lower some assessment. And for example, the penalty ticket and whatever John has and you denied, those are not John's penalty. Those are the contractor's penalty. It would come through the invoice anyway if you don't, John just was nice enough that to pick it up and paid it, but we should have just let them bill on the invoice. Could you consider that? So we would have things that we can talk to the manager. The manager don't have to agree with me, but they will hear our voice, right? Or I let auditor know that community CP and John plan to file appeals. And so in 30 days, we must decide. So I got the letter on June 24th. I have to file appeals before the 30 days is over, which is almost the end of July, right? Most of the appeals will be resolved before the tax court. But if you don't resolve your issues with appeals, then you go to tax court. Determine appeal type based on the amount owed. So before we file appeal, we need to know how do we do it, right? And it's not like it's just one way of doing appeal. Depends on how much John owes. If John owes less than $2,500, so we can request a simple call or a letter to appeal and to have the appeal look at it. And for amount between $2,500 and $25,000, and this is John's case because you remember his tax was $20,000 some with change, right? his new tax liability. So he would fall into this. We need to submit a small case request letter or complete the IRS form 12203. If John owes more than $25,000, like the February 22, that assessment was $300,000. If John did appeal on that one, he would have to write an official protest letter and to go through tax court. That's the form 12203 and with the protest letter. All right. So I am about to wrap up this talk. Let me just say that, could you just don't get audited? Why do you have to go through this path and, dealing with all of these things? Just don't get audited. And if you want to not get audited, did you see where I highlighted? You need to do data match for all entities you have, your business, your 1040, and you do data match. You will not get this letter. John will not be audited if he did a data match because he will not forget his gambling gain. When we do data match, we already knew what IRS has on your file. We will talk to John that, hey, John, you forgot about reporting gambling gain. John will be like, yes, you're right. I don't gamble all the time, and I did it occasionally. I don't win all the time. I forgot about the happiness, so I forgot to tell you I made money. So these are the things you can avoid, especially when us getting older and older, and you probably get more and more at home. All these letters and stocks and your annuities and your interest. And God knows the gamblings, and some people are gambling online, and you got this W2G. All of these, if you don't have a good handle of your life, you need to do data match. Of course, when you work your taxes with your professional folks, and the trend analysis is naturally in, we will tell you that, man, your tax return looks so weird. It's probably going to raise a red flag. The tax structure update with your business growth is also very important. You don't want to stuck in the baby suit, but while being an adult, people will spot you. Go, that's not a good fit, and we need to audit this guy. So you want to make sure that your structure fit you, and you want to do tax planning so you're always ahead of the game. Do not listen to your friend or TikTok says that who and who has done such and such and never got caught, and so it must be okay to do. It might be okay for them, but it's not gonna be okay for you. I never believe myself being lucky. I actually believe that I have to work hard to make it, and I have to make sure I did everything right to stand still in front of this monitor. And I just think that a lot of people are just like me. We don't really have those kind of luck to get away from whatever. Like people would get away from indictment, still run presidential election. Man, and that's a really big luck. And I don't have that kind of luck. I don't think you do. You just make sure that you're doing it right. Okay? And with that, I want to show you this. Where is the clue? Because you remember I said that John was audited not because of his Schedule C. It's actually because of his gambling gain, and he did not report. So that's the data match piece that he's missing. The clue is right here because the number one is gambling gain winning. The letter he got initially tells it. So with that said, I am done with today's literature, and I hope you gained a point or two. If you like my webinar, don't forget to give me a thumb up because that's really helped me to feel excited. And I'm always excited when I'm in front of the YouTube channel and wanting to share what I know. Why not, right? Sharing is so amazing because you learn. And while I'm sharing, you guess what? I learn too. Don't think it is one way, it's both ways. Now, we have these partners right here in front of your screen. And if you want a free consultation for 30 minutes, the partners, Dan, Song, Juan, and Derek, they all four of them have a 30 minutes free consultation, and you can ask them any question you want, and to get a feel of how we are. And myself and Dr. Hao, and we don't have free session, but you can book our time knowing that every penny you spend on our time is gonna worth it. I knew it. I've never ever had anybody come to my session goes, I just think that I paid it, not worth it. No one. And I have been this way for many years. So I have grown into a person that confident in that. So I'm showing you my competency related to giving you advice, and you can book my time. And tax planning season is right here. Doing tax planning, it is taking away the surprise you're going to have in 2025 for 2024. Do that. It is important. It is a good lifestyle to develop. And if you have done your living trust and trust document with our firm, then it is important to have a tax planning session every year. So during that time, we also update your trust document as well. And we also have this last screen showing you our YouTube channel, and we have this circles logo on YouTube. You can recognize us that way. Subscribe to our channel, and you have our website, communitycpa.com. Catherine at communitycpa.com. She is a lot of things for me. She does library work for me, and she always do the initial base for the presentation. Then I go in to do some modifications and changes. She's absolutely amazing. She's also our marketing manager here in our firm. So if you felt like our marketing is doing great, that is because of her. And if you want any subject to be talked about, and you can email her, and she will get me here and make me talk to you about your desired subject. Our firm opens 6 days a week. Yes, Monday to Saturday. And we have 2 teams, right? So Monday to Friday team and Tuesday to Saturday team. And we open 8:30 to 5:30, and I welcome you to consider our firm at this time of the year and starting your 2025 or doing your 2024 summary work and filing your 2024 tax return with Community CPA. I'll see you somewhere, somehow. Bye-bye.